I'm going to tell you why. Imagine waking up in 2026 to headlines screaming U.S. Special Forces raid Venezuela, capture their president. Then President Trump demands a staggering $1.5 trillion defense budget for 2027, a 66% jump from 2026's $900 billion. Mind you, the last time the defense budget increased by even 50% was 40 years ago in the Cold War. While the headlines hype the chaos, a select few defense giants are trading at relatively attractive valuations with forward PEs even in the low 20s or even teens, and massive backlogs that could fuel years of growth. In this deep dive video, I'm going to break down why the defense and aerospace sector could be one of the strongest plays of 2026, spotlighting two powerhouse stocks and an ETF that are perfectly positioned to benefit from Trump's green candle parade in defense tech. Stick around, because in these troubled and dangerous times, as the president calls them, the smartest money will be loading up straight into defense. Let's dive in. So I'm going to go over a few things before I get into the selections, my personal selections that I'm going to be adding to my investment portfolio, not my trade portfolio. This is a top 6 list for investment purposes only, and this is not financial advice. I'm not your financial advisor. You should do your own research. You use fundamental analysis, use technical analysis, and make your own decisions. I am here as the voice of logic and reason to tell you my opinion. And my opinion as a geopolitical, macro, global finance person over the last 20 years. I've spent many years in China, many years in America, and I've seen both markets, and I tend to follow what the central governments are going to do. So let me first explain. In China, everything is centrally planned. So as a macro analyst, you'd like to see what China is going to be spending on and then put your bets on that. That's the same logic I'm going to be using for the defense and aerospace sector. I think that Trump is calling for $1.5 trillion in military budget in a year. That's a lot of money. Do $1.5 trillion divided by 365. Let me do it really quickly. 1,500 divided by 365. That's like 41 million a day. I mean, I was just eyeballing it. 410 million? 410 million a day, is that right? It's a lot of fucking money. And, it's going to these defense stocks in the defense and aerospace sector. And that's investment coming straight from the government to defense and aerospace. That's going to benefit their top and bottom lines, their top line revenue, which they already have a backlog of orders from, and they already get a significant amount from America. That's going to be increasing by 50% from 2026's $900 billion. Then you would say to yourself, well, if investment's going to be increasing by 50%, or 66%, 1.5 trillion divided minus 900 is 600, divided by 900 is 66% increase. Then what are these defense and aerospace companies? They have to go up, because it just makes sense that if you're getting money in, and that's revenue, and that's your business model, and you're going to be reporting that revenue and expense that you're going to incur and as profit later on. So without wasting any time here, I want to get right into it. My number one pick is going to be, for my portfolio, is going to be Northrop Grumman, okay? Ticker NOC. I look at the market cap, 88 billion. I look at the trailing and the forward PE. This is really juicy. Of course, it is trading a little bit higher than in the past, because in the past, the price was lower. The price is going up. So this tells me that I'm getting a decent price. How? When I look at its comparables, like Freeport-McMoRan is trading at 30 PE or something like 28 PE, I'm going to choose Northrop Grumman because they're in the same industry, they're doing the same stuff, and I'm getting a discount on the price, okay? And we'll go over to the summary here. I believe they pay a dividend as well. Does that show here? Yeah, it does. Look at that. So what this tells me is 1.49%. It's going to be, I think it's going to be an annual number, if I'm not mistaken. If I am mistaken, it's a quarterly number. So it's either quarterly or annually. I think this means dividend and yield. So that's 1.49% a year. So if you make, let's say you're holding this stock, you're holding this stock for a year, right? And you bought it here at 472, and you're at 618. You have approximately 40% in capital gains. This will add another 2% to that. And over the years, that accrues. That can be a lot of money. If you're talking about $100,000, $1 million investment, that's a lot of money. 2% for free just for holding the stock. And so when I look at the fundamental data, PE of 22, forward PE, right? Financials, no, statistics. A forward PE, which is really the one you want to be looking at because everything is priced forward in the stock market. A forward PE of 20, a beta of 0.05. So let me just, where's my beta? I closed it. Google, what is a beta in stocks? A stock's beta measures its volatility and risk compared to the overall market, usually the S&P. I've talked about this before, but I wanted to give it black and white for you, indicating how much its price tends to move in relation to the market swings. A beta of 1 means it moves with the market. So like if Bitcoin goes up, Ethereum goes up by the same amount, but that's not true. Ethereum goes up by more, Ethereum goes down by more. So Ethereum would have a beta towards Bitcoin of over 1. Greater than 1 means more volatility, less than 1 means less volatile. And if we look at Northrop Grumman's beta, I mean, it's basically 0. So if you're buying it like, here at the start of Trump's term, you really made out like a banshee. This is a low beta stock that's moving 40% a year. That's really good, ladies and gentlemen. And when if the market crashes, let's say a black swan hits, right? Like let's say a US gets bombed by Moscow, these guys would go up. So all your stocks in the portfolio are going to go down. These guys are going to probably initially go down with the shock value and then go up because they're going to get more investment. They're going to get more revenue. So as a portfolio balancer, I need to consider thinking about defense, which is different than defensive. Defensive is like consumer retail, like Costco, Walmart. That's defensive. So if the market goes into recession, those defensive stocks, they do pretty well. But this is defense and aerospace, okay? And the cap's fine, $88 billion for a huge defense and aerospace company. Northrop is experiencing a positive shift in analyst sentiment with a fair value of blah. The proposed one, So again, right? I mean, this is what I was saying, right? Money coming in, good, right? And this is why I want to own it. I mean, look at this stock over here. It's got a nice cup here, and it's making what? Higher lows and higher highs, right? And that's what you want to see. Look at it. I put Northrop because of this. It's technically speaking, higher low, higher high, higher low, higher high. This is on a weekly. Let's switch it to a daily. Yeah, and then, you get this beautiful daily chart with the Gaussian red, but now it pumping right, this is a Trump pump we're talking about. So it's pumping right above the Gaussian. What do you think is going to happen to the Gaussian? The Gaussian is going to flip green. So my number 2 pick is going to be Lockheed Martin. You're going to see a market cap significantly higher than Northrop Grumman, okay? The forward PE is actually less than Northrop Grumman, so this is going to be my overweight. Even though the market cap is higher, the PE forward trades at a discount compared to Freeport-McMoRan, to Northrop Grumman, etc. That's what I'm looking for from a fundamental bias, from a fundamental analysis point of view. I'm looking for this and I'm looking for that. And I'm saying juicy because they do similar stuff. And Lockheed Martin, you can bet, is going to benefit from Trump, from defense spending. Let's go over to the Lockheed Martin graph. And again, it's going to look similar to Northrop. On the daily, it flipped red because it came down. And this is a daily chart, so it's a little bit quicker. And it's probably going to flip. Again, what are we talking about here? Low, low, high, higher, high. That's the name of the game, ladies and gentlemen. We don't want to overcomplicate things. We want to simplify things. And let's just go through the same data that I went through with Northrop Grumman, ticker LMT, beta 0.25, which is around 0. PE ratio, but the forward PE is much lower than that. And the forward PE is really what you want to consider. And this looks much, much more attractive if you go and look at the forward PE and saying, holy moly, this is under 20, this is 18. The S&P is trading at, I believe, 25 to 28, and that's the S&P. So these are going to be slower moving, but as you can see in the last year, they're not slow moving. They're going up. And you get a pretty good price. You buy 469, it's not now 542. It hasn't really moved much. And you got a PE much lower than the S&P. That's a recipe to buy, ladies and gentlemen. Here's where I modeled them. I also have two ETFs. We'll take a look at ITA ETF, and XAR. XAR is an equal weighting. It means that their ETF will have an equal weighting based on large, medium, and small. So if a large cap gets too big, it starts moving too much, they will sell the large cap and reinvest to have an equal weighting of the ETF. So let's go check it out. Bingo. That's what we like. And again, if you're buying the stock, you're buying more risk. You're buying the individual risk, but you're also buying the yield here. Look at this yield. I almost forgot to cover it. 2.54, bigger than Northrop Grumman, bigger. So you're getting 2.5, if you invest $1 million, well, you get 2%, or let's call it 100,000 because it's a nice round number. You get $2,540 a year. Compound that over 10 years. What do you got? And this thing goes up for 10% this year, 35% next year. It will go up, right? If it gets that defense spending, it will go up. And chances are it's going to get the defense spending because Trump has the Senate and the House. So what he wants, he's going to get, and he's going to get that this year. He's going to get it before elections. He's going to shove this through, okay? So count on that, and that's why it's the number 3 investment. We're looking forward. We're speculating forward. We're not speculating on 2026 per se. That's already worked into the price. We're speculating on 2027, okay? And here we go. You're probably going to find Northrop, and there you go, Northrop and Lockheed Martin, big holdings. So if you want these two, you just buy the ETF. I'm sure you get the dividend as well because the ETF won't steal the dividend from you. So GE, another great one, 21%. Wow, that's fucking huge. Let's check out GE here. Let's check them out. Well, what's going on? Maybe they're a top pick of mine. No, you see, 43, they're trading at a nice premium, so you're paying extra and you're getting a less dividend. So these guys are overweight GE, but I would underweight them in my personal portfolio just because I'm paying a premium for them. So if you're going to buy ITA or the other one, you're probably going to get a lot. Actually, XAR will sell GE because it's such a large cap and it's outperforming and reinvest in the lesser performing ones to be an equal weighting. So that might be worth taking a look at. But yeah, I just wanted to go over ITA because it's got Lockheed and Northrop right in the middle there. Boeing, of course, I've heard of them. RTX, Transdigm, General Dynamics, yes. L3, yes. All big cap, serious, multi-billion-dollar company in market cap. And yeah, that's it. That's all I have today. For number 3, this is your number 3 investment of 2026. Industrials, aerospace, and defense. Thank you. Like, subscribe, comment. They help. I love this shit. So thank you very much. See you soon.